All right, so we started a class where we talked about broadly about trading strategies, all right? We talked about so many different strategies. We talked about trending strategies. We talked about ranging strategies. We talked about all kinds of strategies, fundamental strategies, so many different strategies we talked about the other day. And then we did it like a broad, it was broad, right? We talked about, we didn't go deep into any one of those strategies. We just talked broadly about all of them, right? Day trading, swing trading, all kinds of trading, right? That's what we talked about the other day. And then I said we're going to have other classes where we're going to be discussing each one of those strategies in depth so that we can have an understanding of each one of those strategies. And then I said that when you want to know what strategies work best for you, you want to know what kind of a trader you are, right? You want to know what kind of a trader you are, because the kind of a trader you are is always going to determine what strategy is going to work best for you. Anybody can trade anything, right? Anybody can use anything, but the kind of a trader you are will determine the kind of trades you want to take, the kind of strategies you want to use, the kind of approach that works best for you. Okay, there are traders who will be able to sit on a trade for 2 days, 3 days, 2 weeks, and the trade is still running and they are on that trade. They are willing to see their trades go up and down while going to the direction they have analyzed. Okay, so basically those are swing traders. They swing, they take a position, and then they stay with that position for a long time. And then there are intraday traders. You enter a trade within a day and you're out of the trade, right? Within a trading day, you enter, probably you're taking 30 pips, 50 pips, depending on how the market moves. You could get up to 100 pips, right? Most of the time, day traders are not looking for as much as 100 pips or more. For position traders, swing traders are looking for 200, 500, 300, 500, 600 pips moves, right? So all of those things matter. And also for you to be a swing trader, you need to have a sizable amount of capital because your trades are going to go up and down for a long time before it moves in your direction. And you need to have a lot of patience. It's just basically your personality. Does that work for your personality? If that doesn't work for your personality, there's no need to force it. There is no best way to trade. There are people who will say, oh, this is better than the other. The truth is that there is no one approach that's better than the other. What the approach that is best for you is the approach that works for you, that aligns with your personality. Okay? So basically, this is a process of knowing yourself. Right? It's basically a process of knowing yourself. And when you understand and know yourself, when you know yourself, then you'll be able to know exactly what approach is best for you so that you don't try to be like somebody else. You're not going on YouTube or going on Instagram. You can get inspiration from anybody, right? You can get inspiration from anybody, but that doesn't mean that you should trade exactly the way that person is trading. Okay? Inspiration from whoever it is, but that doesn't mean you need to trade like that person. Okay, so it could be a position. I know there's a guy who was a mentor of mine a long time ago. He's a position trader. He takes trades, but he has students who were scalpers, and they were making even more money than him at that time. They were making more money than him. At a point, he began considering becoming a scalper too. But he just realized that it didn't work well for him. So he had to still stay with his swing trading and everything. Eventually, he started doing very well with swing trade. Today, he's a swing trader, a very big swing trader, right? So that's how it is. So on this class today, we're going to talk about going to one of the strategies. And this strategy is the scalping strategy. The scalping strategy. So many of us have heard of scalping. Oh, scalpers. Some of you even think you are scalpers, right? Some of you might think, oh, I'm a scalper, right? So the question is, scalping is one of those strategies out there. So it depends. Whatever you're going to use, like I said before, depends on your person. If you are somebody who likes to see profits very quickly, scalping might be a good one for you. Okay, that's how it is. You don't want to see your profits and then it goes to loss. You don't, that's not what you play about. You want to see like 10 pips, 20 pips and you're out of the market, you're a scalper. So what we want to talk about today is some rules that work well for scalpers. Okay, some rules that work very well for scalpers. Okay, so as a scalper, what you are looking first of all is you want to be able to understand that as a scalper, you are looking for between 10 and 15 pips. Now, the points I made here are not in alphabetical order. They are not in alphabetical order. They are not in, we can take any, I'll talk on them I'll pick any one of them and talk from there, right? So these are just broad points. These are just points that you have to master as a scalper, okay? So first of all, as a scalper, you are looking for 10 to 15 pips or maybe 20 pips. That's what you are looking for as a scalper. In fact, most times scalpers don't get 20 pips if you want to really scalp. Right? I knew of a guy some years ago who I said he was one of the mentees of that guy who is a swing trader. That guy was taking his trades with 10 pips, 10 pips. He was so disciplined with 10 pips. This guy will make $1,000 a day, every single day, $1,000 every single day. He doesn't fail. He just does it like play. He will trade, he'll pick it. There are some pairs he trades. You know, he picks like 2 or 3 pairs. I remember he trades every single day. That guy will make $1,000 and above every single day. And he takes only 10 pips, only 10 pips. Okay. So you can see that even with 10 pips, some people think that except you are going for 100 pips, you can't make money, right? But then that's why I said there is no best way to trade. This is the excellent way. This is the best way to trade. There's nothing like that. You can be a position trader, you can be a scalper, and you can make, as a scalper who is taking 10 pips, you can be making more money than the guy who's going for 600 pips. And I also know of a lady one time, a few years ago too, who the lady stays in the US, and then there was some platform where I was part of, and then she was one of the trainers on that platform. And then this lady was, her trading was 10 pips, 10 pips, 10 pips, 10 pips. Right? She grew her account over $1 million within a year, just doing 10 pips. You see, so if this is something that that resonates with you, something that works with your personality, this can work very well with you. But you have to know how it works. How does it work? Number one, you're looking for 10 to 15 pips. Only a few times. There are only a few times where you might want to take 20 pips. Right? So most of the time you're looking for 10 to 15 pips, 10 to 15 pips, okay? 10 to 15 pips is what you're looking for most of the time. And the thing is, there's a question of being disciplined with it. When you are disciplined with it, that's what it takes, okay? When you are now you could enter a trade that does 10 pips or does 15 pips, and then you are looking and then you see another 50 pip move there, 70 pip move there, right? 50 pips, 70 pip move right there. You are not going to keep chasing that because that's not what you are meant, that's not what you're supposed to do, right? If you find yourself take 10 pips or take 15 pips and you are thinking, oh, I missed out on the other ones, then you have to check yourself very well. Check your personality. What do I really want? What kind of a trader am I really? Because as a scalper, when you get 15 pips, you are glad, you are happy, you have made your money for that trade. Whatever that trade does is not your business anymore. Whatever that trade does is not your business anymore, right? So basically, that's the way a scalper thinks. And you have to decide whether this is the kind of personality that you have. You get? You have to decide, is this the personality that I have? Is this what I exactly want to? This is the kind of trader I exactly want to be? That's up to you to decide, right? Good. So now the next thing you want to understand is you want to focus on 1 or 2 pairs. 1 or 2 pairs. Now, it is a myth, guys, that you cannot make money in the market or you can't make a lot of money except you are trading so many different things. You are trading Euro USD, you are trading gold, you are trading DXY, you are trading Euro, you are trading crude oil, you are trading NASDAQ, you are trading everything. It's a myth that you have to trade all those things to make money. It is not the fact. It is not the truth, right? So it's not the truth that you need to trade a whole lot of things to make money. No, that's not what you need. What you need is a sizable capital, which can be determined by you, whatever that means to you, depends on how much you want to make. If you are content with taking $10 trade, $10 profits, if $10 profit is okay with you, then you can have a couple $100, $200, $300, $500 in your account. But if you want to be able to take trades, and then you want to be able to bank $100, $200 on a trade, you know that you're definitely going to have more capital. You're going to have $2,000, $3,000 in your account. So when I say the capital, you have to have a sizable capital. It's really relative. It depends on you, what you are comfortable with taking, right? Like I said, if 10 pips, if you take $10, if you enter a trade and you close that trade with $10 profit, if that is fine with you, then of course you can have $200 in your account. That's fine. But if you want to make $150, $200 on a trade, then you cannot have $200 in capital. So what you require is not to trade so many different things. What's required is you pick one or two pairs, you focus on them with diligence, you understand their movement, because see, whatever strategies, guys, I've said it before, whatever strategies you want to use, whatever strategy you want to use, will work broadly. Is it Fibonacci? Whichever support resistance structure, demand supply zones and everything you can trade, every strategy you can use will work generally, broadly across different instruments, right? But then there is a way it will work. When you pick an instrument, let's say you pick Bitcoin, for example, how does Fibonacci, for example, work for Bitcoin exactly? That's something that you can't just take broadly. Why Fibonacci, for example, will work for Bitcoin, USD, JPY, GBP, USD, Brent to gold, it will work, but the way it works will vary just slightly. Okay, so that's what you have to now understand when you are able to focus on one or two pairs. When you focus on those one or two pairs, now you'll be able to know exactly how whatever strategy you are using works for that particular pair. Is it break and retest? Does it have to, when it breaks and retests, how does it retest? It works differently. I can pick Euro USD and I pick BTC, or I pick gold, and the way the retest will happen will be different. It will just be different. How does it happen for the instrument you're trading? That's the reason why you need to focus on only one or two instruments. Because if you try to focus on so many, you get confused and you'll be able to follow them. Really, you won't be able to follow them and understand how they're working. And also, whatever capital you're trading, you can't put so much. When you fund an account and you want to trade, put 10 trades, 5, 7, 10 trades on one account at the same time, because sometimes you will find trades. For example, you might find a trade on Euro USD playing out, and you find the same trade in the same direction on gold. You find the same trade in the same direction on AUD USD, NZD USD, GBP USD, all of that, right? You decide to do that. If one goes wrong, it goes wrong on your whole account. See, so that's the reason why when you focus on only one or two, then those are the only ones you're trading. If you enter a trade and the trade didn't go the way you planned, you just close your trade and you're out. You minimize your risk when you focus on only a small amount of instruments. Okay, so that's one thing you want to concentrate on too. As a scalper, what instrument am I going to focus on? Am I going to focus on GBP USD? Am I going to focus on USD JPY? Am I going to focus on BTC or NASDAQ or gold? Which one are you going to focus on strictly, right? So some people think, oh, gold makes a lot of money. Now, gold makes substantial movements. Gold is very volatile, right? Now, volatility is good for us traders, because volatility is how we make money. If there's no volatility, if market stops moving now, like it does during the weekends, there's no way you can make money because there's no volatility, right? But then every instrument here has volatility. Some have more volatility than others. But the point is that, like I said earlier, just the way you don't need so many different instruments to make money, to make a good amount of money in the market. You don't necessarily need to trade specific instruments like gold, like NASDAQ, and all of that. But if that's where you want to focus your attention, if that's what you want to concentrate on, that's perfect. Then you have to now sit down and understand. Not that someone tells you that, oh, gold makes money, so now you want to go and trade gold. You haven't looked into gold and said, okay, what strategy am I going to use to approach gold? What strategy? How have I back tested it? What have I tested? What is working for gold and how is it working for gold? Right? So that's very important for you to understand. So it doesn't matter which instrument you pick. The most important thing is which one are you going to focus on? That's what will be, that's where your attention will be, right? Why personally I do analysis on all instruments, right? But I don't trade all instruments. I probably trade like one of those instruments you're seeing, right? That's it. I analyze all of them. I look at what they're doing. I follow what's going on. But I will not put my money on all of them. There are analysis I will do. I know that this is what's going to happen. I won't put my money. Put my money means I will not place a trade with real money on that particular move. Not because I don't know it to play out, but it's not the asset that I trade. It's not the instrument that I trade. And if I trade in and it goes wrong, I'm going to blame myself. I'm going to say, no, I broke my rules. Because the truth is the market is like real life. It's not fake, right? The market is not fake. The market is real life, just the way that if you break your rules, you get punished. It's just like when you break the law, you get punished. When you come into the market too, when you make rules and you say, okay, this is what I'm going to do. I'm going to risk this amount of money. I'm only going to risk this amount of money in the market. I'm going to do this. I'm going to trade this. And then you break that rule, you will find out that you start to make mistakes and you start to lose money just because you're not sticking to what you have already determined to stick to. You see? So that's the reason why it's very important. And now that takes us to the other point, which has to do with have a written plan and stick to it until you master it. So when we say a plan, we have classes before where we talked about how to develop a trading plan. And we'll still have classes in the future where we'll talk about how to develop a trading plan for those who missed the previous ones. Okay? Now, when we talk about a trading plan, sometimes some people think in terms of a business plan. Yes, in terms of a business plan, but it's much simpler than that. It's not as complicated as as a business plan. What you just want to do with your trading plan here is that you want to be able to put on paper, you want to be able to document everything that you do, everything you decided to do. Because something I've discovered is this: except you make a rule and you write down that rule doesn't stick to you. You are not obligated. You don't feel obligated to abide by a rule that is not written. It's more like a thought. There are many thoughts in your head and in your mind every day. There are many things that come to your mind every day. For example, you could have a trade running, or maybe a setup is coming, and you've not mastered what you are doing, and you say, okay, your mind says, okay, maybe I should just increase my lot size at that moment, right? At that moment, and you just, okay, let me try it. And then because you never planned it before, you've not mastered what you're doing. Maybe it's your first trade or it's your second trade. And then you've not understood what you're doing and you're just chasing the money. And then you say, let me do it. And then that's the one you now took and it went against you. And you're like, oh, they were watching me. I'm sure some of you have heard it. Some traders who say, oh, they were watching me. My broker was just watching me. Now, why is it that is when I placed that lot size that the thing now went wrong? They were watching me from the other side. But the truth is nobody was watching you, right? Nobody was watching you. Okay, I was talking to a trader a few days ago, and the guy was saying, "Oh, this is wrong. My broker is doing this. My broker." I said, "See, you don't know what you are trading. You don't even know you don't even know how to take a signal, and you are talking about somebody being your problem. Nobody is your problem. You don't even know how to take a signal, right? So how can somebody be your problem?" So when you create a plan, what the plan does is that a plan helps you to take everything that you have determined to do, the process that you have decided to follow, right? You take that process and you basically document it. That's what a trading plan is. So what am I going to do? What does a trading plan entail, for example? What do you have as a morning ritual or as a morning routine? Do you have anything like a morning routine? Okay, a morning routine is something that you do in the morning in a regimented way. right? Like in a ritualistic way, not a ritualistic way, like a ritual, but this is more like a ritual, something that you do persistently, consistently every day. Okay. Now, the reason why it's important is like waking up by a certain time every day, like 5 a.m., or I wake up this time every single day. I wake up this time every single day. The reason why that's important is that it helps condition your mind in a certain way so that you can do certain things the same way every day. Because success is about repeating the right actions. Success is about repeating successful actions on a daily basis, right? So when you can succeed today and you can repeat the same process that you took today, you repeat it tomorrow, what's going to happen? The outcome is likely to be success. Now, when you repeat that again and again and again, you are successful for a long period of time because you are repeating successful actions, successful endeavors, successful actions, what you are repeating. Okay, that's what you want to do. Okay, I trade Euro USD, for example. That's what you want to do. You want to outline that on a plan. So my plan is I trade Euro USD. So how I will trade it, for example, these are things you have outlined. Okay, how I will trade it. When I wake up in the morning, if I'm a full-time trader, okay, this is what I do every day. If I'm not a full-time trader, I have a job. Okay, I go to work in the morning. But when I'm going or when I sit down my desk, what I need to do, I need to go to maybe investing.com. I need to check up news that relates to the euro or that relates to the dollar. Like today, we had inflation numbers that were released from the US economy this afternoon, just a few hours ago, right? The inflation numbers were released and it affected the market, made a huge move on the market, though what the market was expecting was around what came out. So the market was not really, didn't move in a particular direction massively like that, right? So some of those things are the things you're watching because the trade you are on right now can be in positive and you're not aware a news event is coming out and it turns to negative immediately, right? So what you want to do now is you want to outline, okay, when I get to my desk every day, I have to go to investing.com or I have to go to Forex Factory. I have to outline the news events that are expected today. If there's anyone, if there's no one, then I know that, okay, today is a free day. I'm not going to be looking, I'm monitoring the markets to make sure that a news event doesn't affect my trading. All of that, you document it. So you repeat the same process every single day. All right, you repeat the same process. Okay, how do I do it? How do I do my analysis? How do I do my analysis? All right. Now, if you're just joining the class, guys, we are talking about trading strategies. I can see a lot of you just joining. We're talking about trading strategies. Okay, and then we started talking about trading strategies previously. Now we are focusing on scalping today. What are the rules for scalping? What do you have to understand? What kind of mindset you have to be able to scalp properly? Okay, that's what this class is all about. All right, so the class is being recorded. We're going to go over, you're going to be able to go over the class again for those who are just coming in right now. But of course, there's still a lot for us to talk about. You're still going to benefit a lot right here. Okay, so that's what you want to be on the plan. The things you want to be on your trading plan, right? You want to make sure that, hey, everything you are going to do, basically the process is like the process of making cake. Cake as an example, right? What's the process? What's the process? What process you have to take in order to arrive at the outcome every single time? If you change it, it becomes something else. Okay? If you change it, it becomes something else. It becomes something else. So you want to be able to follow that. Okay, what's my process of doing my analysis? Do I start from 4-hour charts? Do I start from daily charts? Do I do multiple time frame? Do I go to 1 hour? Do I go to 4 hour? Do I go to 15 minutes? How do I enter my trade? What's my process for entering my trade? All of those things need to be documented. That's what a plan is, right? It is not cumbersome. I know some people think when they hear plan, they're like, oh, that's complicated thing. No, complicated thing is not, it's not complicated at all. It's just, what would you do? What is the process of entering your trade? What do you do in the course of your trade? All right. Now, if you're a scalper, you are most likely looking for 10 to 15 pips. So you might as well just not bother about, you just set your take profit for 10, 15 pips, and you're out of that trade. All right. Now, you also need to determine your risk. What's going to be your stop loss? For many traders that Scalp, they don't use the stop loss. They manually take care of their trades. They manually close their trades because they are looking for 10 pips, 15 pips. Most of the time, they don't use the stop loss. They just use only take profit. When the thing comes there, it hits their take profit and they're out. But then depending on you, you also might have to determine that, okay, what's going to be my risk on this trade? And then you set your stop loss as well. Okay. Now you can use 15 pips as well as your stop loss and use 15 pips as take profit, or 10 pips as stop loss, 10 pips as take profit, because we want to be able to maintain a risk to reward ratio that makes sense for trading, a risk to reward ratio that makes sense for profits. Okay. So all of that is, so you put down all that in your plan. In your plan, this is how I do it. This is how I do my analysis. Oh, I use Fibonacci, or I use this, I use that. Whatever you are using, you just write it down. That's all. It's a question of you're already doing this thing, or you've already determined that you do this thing, or you've already learned that this is the process you are going to take. You are just writing it down. Okay. So now the other thing that has to do with your plan is your journal. Now, what is a journal? A journal is basically you imputing, just recording what you have done. When you enter the trade, you follow this process that you have now, okay, that you already created. Okay, you entered your trade, you did your analysis from the 4-hour chart, you entered your trade on the 1-hour chart, then you recorded, you did all that, and then the trade went in your favor, or whatever it is, however the trade went. What you did now, you picked your notebook, and then you recorded it. That's just it. Oh, I took this trade and it came out like this. This is how I took it. I followed my rule, or I broke my rule. You document it like that, right? You document it like that. That's what a journal is. A journal helps you to know where you are going wrong. There are times in the past where I had challenges in my trading. In the past, I had challenges, and I went and I looked at where was I really getting. Then I thought, sometimes, let me tell you guys, sometimes you might think that you have bigger problem. You might think that you're not doing well just because you made a losing trade. You might just, your mindset can take a very big hit just because you made a losing trade, one losing trade. You just think, oh, this is not working, this is not working. But by the time you go back and you check, if you documented that thing and you journaled it, journaling here, very simple, guys. Euro USD. I took Euro USD at 3 p.m. and the outcome was positive or negative. I followed my rule that I said. Journaling, that's as simple as that. You have remarks. I did a class on journaling, and I gave you guys a template. That was some weeks ago, right? So I don't know for those who were in that class or not. I gave you a template that you can easily use and just copy it and use. It's very simple template. You just have a remarks there. You just say, okay, this is what I did. I did this, I did this, I did this. I could have done this better. I could have done this. Next time, I think I should do this. Okay, I actually wrote this on my plan to do, but I failed to do it. I made a mistake. Next time, I'll correct that. That's in your remarks. That helps you to come back tomorrow, look at what you did yesterday, and actually learn from it. Because sometimes, like I said, you could have a losing trade, just one losing trade, and you think that the world is falling down on you. And you think, I'm doing so bad, this trading is not working. Meanwhile, just one thing. If you go back, if you wrote it down and you went back and checked, you'll be like, I'm on course now. Is it just this thing? You'll be like, I'm on course. You get back into trading because you know that what happened was just is a mistake that you can correct on your next trade. So it's not a big deal, you see. But if you don't have the benefit of hindsight to be able to look at where you made a mistake, your mind has a tendency to magnify the problem and make it look bigger than it actually is. You see, so everything we are told to do, every best practice or good practice that we are taught in trade is actually for a good, is actually for our benefits. I know sometimes it can look like it can look official, like, oh, I'm writing. But then that's if you are running a business and you say you don't want to write, you don't want to document anything, how are you going to run a business? And if you are doing something, you're putting money into something in order to make money, what are you doing? Is that not the definition of business? That's definitely the definition of a business. So you want to be able to take seriously what you are doing. And one of the ways you do it is by creating a plan and then following that plan and documenting the results that you get so that you can learn from the process, knowing that you're always learning, except you've gotten to a point where you think you know everything. If you think you know everything, well, that's fine. But then your trading results will show how much you know. All right, it will show how much you know. If you're not getting the kind of results you want in your trading, which is you withdrawing profits. If you're not withdrawing profits, then that means there's a lot you need to learn. So in that case, you need to be able to calm down and actually do the right thing so that you can improve every day. All right. Something someone said to me many years ago that actually makes sense, right? Is that every time he said, he's actually a top trader. He said every time he makes a losing trade, he doesn't move on to the next trade until he sits down, analyzes the mistakes that he just made, and then know where he made a mistake before he moves on, right? So that's a very good idea. That's a good idea you can do and say, okay, this trade. And then, like I said, if you are focused on only a few pairs, that's when you can do this. So everything ties together. Okay, if you're following it, then you can know, okay, this is what I did, this is what this should have done, this is what I should have done, this is what I should have done. I won't do this again, I won't do this again, I won't do this again. Right? By the time you correct yourself a few times like that, it becomes registered in your mind, and then you begin to practice, you begin to do whatever you're doing, whatever you're trading, you start following those rules basically subconsciously, right? That's it. So next, you want to get your entries right. Get your entries right. So if you're going to choose Scalp, you are going to be very good at understanding supply and demand zones. Supply and demand. Most times, scalping happens around supply and demand zones, right? Most of the time, scalping happens around supply and demand zones, right? It is either price reverses around supply and demand zones, support and resistance, basically. Supply and demand usually confuses some people, but supply and demand is basically support and resistance. Okay, now supply is support. Supply is resistance. Supply is resistance, while demand is support. Support is demand. Resistance is supply. Okay, so let's stick to supply, support and resistance so that some people don't get thrown off. Okay, now when you understand support and resistance very well, you'll be able to scalp, because most of the time, we've said before that two things happen whenever price gets to a support or a resistance. Price will either reverse, in which case it gives you a price action to that effect. You might see a bullish engulfing at a support. That's telling you price is about to buy. Okay, price is about to buy. Or you might see a hammer price around the support. That tells you price is about to buy. Remember, guys, we talked about that just a few weeks ago. We talked about price action, right? We talked about the patterns that are best used for reversal trading. Okay, so most of the time, reversal trading works well for scalping. So when you come to a support and you see a bullish engulfing, you see a hammer, then you can enter your trade for a buy, and then you take your 10 pips and you're out of the market, right? You take your 10 pips and you're out of the market. It happens very quickly. In many cases, if you are trading at certain times, at the time that is best for that instrument that you're trading, right? So all of that is part of you understanding one or two pairs. There are times, the instrument I trade, for example, there are times if I am trading at this time now that I'm doing this class, the instrument I trade, this is not the best time to be trading. Price will not move very fast. For me personally, that's something I've come to know. So if I enter a trade at this time, sometimes I will have to close that trade and just get out. It will usually not do what I expect it to do, because what happens is the market slows down during this time because London session has closed. Once London session closes, you see that the market slows down. Then the market may pick up again much later during the Asian session. And by then, due to my time zone, I'm probably sleeping at that time. So I don't want to be trading I don't want my trades to be running when I'm asleep most of the time, right? So that's the reason you have to know what's the best time. Some people trade immediately at 8 o'clock when London session opens. That's when they do their trading. They trade at that time, and within an hour or so, they are done. What works for you is part of what you need to write on your plan. Okay, so you understand support and resistance. Okay, what is it? Now, support and resistance, most of the time, if you want to scalp, go to the 4-hour. Go to the 4-hour. The 4-hour support and resistances are usually the strongest. 4-hour and daily charts. 4-hour and daily charts are usually the best for you to scalp, because at the time you're scalping, you're just looking for most of the time they are reversal trades. You just want price to flash back, hit a resistance and flash back 10 pips, 20 pips, and you are taking profits and you're out. That's the way it works, you know. So you just want price gets to a support, it flashes, and then 10 pips, 20 pips, you are out of the market. That's what you're looking for. So you want to be able to find very solid support and resistance points, very solid support and resistance points that will work for you very quickly, right? And the best ones are on the higher time frame. The best ones are on the higher time frame. Now, when it comes to entries, you can decide to go to a lower time frame, like 15 minutes, to take your trade, right? But then you have to, first of all, identify your support and resistance on the 4-hour chart, on the daily chart. On the daily chart, remember, you're also going to follow the news. That's part of it. We talked about that just now. You're also going to follow the news so that you're not trading when there is a news event, because the market will not do what you expect it to do when a news event is playing out, especially a high impact news event, right? When there's a high impact news event, the market will ignore you. In fact, your account is in danger if you are trading at that time. You see? So that's the point. You have to keep tabs on that first. And then whenever there is no news that you're about to trade, you want to go to higher time frame, daily chart. By higher time frame, personally, I'm talking about daily chart and 4-hour. Now, your entries may not be on 4-hour, but you are going to have to mark your support and resistance on the 4-hour chart. Then you can decide to do your entry on the 15 minutes. Now, the reason you're using 15 minutes for your entry is because that will give you a quicker entry. Because, for example, if you're on a 4-hour chart, for example, and price hits a resistance and starts to reverse, by the time that reversal happens, on the 4-hour for you to now enter the chart, enter the trade, the market has already passed. That setup has already gone. But then that setup will happen well if you go to 15 minutes and use 15 minutes as your entry. Okay? Just hold on, guys. Once we are done, you'll be able to ask questions. Just give me a few more minutes. Okay, so that's what you want to understand. Go to your 4-hour, understand your support and resistance structures there, and then you'll be able to use that for your entries, right? Now, when you are trading, when you are scalping, you are able to, the reason why you want to put all these things in place is this. You are looking for 10 to 15 pips, okay? You're looking for 10 to 15 pips, and then you can afford, actually, because you are looking for 10 to 15 pips, to raise your risk profile a little bit. Where you would have been able to, when you would have risked 2% on your account, you can decide to risk 5%. But then that's because you are going for only 10 to 15 pips. So your entries cannot be whack. Your entries have to be very good, right? You have to know what you are doing. And then, because most of the time your trades, the way it works is that your trades are going to have to play out close to 100% of the time. At least 80% of the time or more, 85% of the time, your trade has to go in positive. You see? So, and that's the reason why you want to perfect that. That's when you can raise your risk a little. When I say you can raise your risk a little, it doesn't mean that if you are trading tomorrow, you should raise your risk. No, I'm just saying that this is where you eventually get to. By the time you have gotten very good at understanding your entries, you'll be able to raise your risk a bit more and be able to take more risk. You might be able to enter a trade, and one trade gives you 5% profit on your account, right? And you can do several of that in a day, right? But then the reason why you can do that is because you have mastered your entries very well. You have come to the point where you have mastered your plan, and you have known how to make your plan and stick to the plan every day. And you are doing this with 1 or 2 pairs. So you basically know how those 1 or 2 pairs work. So you are not bothered. You know where to enter the trade. You know when the trade is not good enough to enter, because you are following those 1 or 2 pairs. Okay? Who's asking me a question? Okay. All right. So these are the things that are very important as a scalping trader, as a scalper. So this is how you scalp like a pro. When you do this and you stick to the plan, you create a plan and stick to the plan, you'll be able to consistently make your solid profit as a scalper. This is the requirement for being a scalper. Scalper is not just, oh, I see 2 pips or I see 5 pips, I collect it. No, it's a plan. You know that you're a scalper, you know what you want to do as a scalper, you know what you want to take from the market as a scalper, and you do it like a professional, like a pro, right? You do it like a pro. So you know what you're not rushing into the market, you're not chasing the market, you're not chasing trades. No, you wait for price to get to that zone where you want to trade, right? If you're trading Euro USD, you're waiting for price to get to that point where you want to enter, where you want to hit the thing. It's like you have one bullet, as it were, and you have a gun and you want to kill that animal, right? In the bush, you're like a hunter. So you don't shoot anyhow. If you shoot anyhow, you lose the animal, you even be in danger. All right. In this case, your account is in danger. So what you want to do is you want to make sure that you wait. For you to do this properly, you have to have patience to wait. But when your trade triggers, you're going to take profit very quickly. So that's what you do as a trader. As a trader, waiting is a part of the game. All right. So do we understand? Do we have a question now?